I mean, Bitcoin for the past 10 years has been not only a leading indicator, but I think a risk on indicator because it does respond to liquidity. So Bitcoin made an all-time high last week. Bitcoin peaked a month before the S&P did. So I do think this is telling us the S&P should be making all-time highs pretty soon, but it doesn't mean I think Bitcoin's capped as well. I mean, I think we have to keep in mind that institutional adoption for Bitcoin's growing. I think that consumer awareness for Bitcoin actually is still pretty nascent. And so when we still have a visible demand coming and a fixed supply, I think it's a lot of upside for Bitcoin.
Tom Lee opens with a clear-eyed take on today's market landscape. With ongoing tariff tensions and global uncertainties, many companies are rightfully staying cautious. In fact, several like Okta are choosing not to provide forward guidance. But Lee urges investors not to interpret this as a sign of weakness. Instead, it's a reflection of how unpredictable the next couple of quarters may be. Despite the current volatility, Lee remains highly optimistic about what's on the horizon, especially heading into 2026. If you're finding value in this analysis, take a moment right now to like this video, subscribe to the channel, and hit the notification bell so you never miss an update. We're constantly sharing fresh insights not just on equities, but also on cryptocurrencies and the entire digital asset space. Got thoughts? Drop them in the comments. We read everyone. Your support directly fuels this channel's growth and helps us keep delivering the content you care about. Thanks for watching, and let's dive in.
Well, I mean, companies should understandably be cautious because, the tariff drama is still in play. I think investors are ultimately going to give pass to companies that don't give guidance. I mean, I don't think Okta's sort of pulling guidance means actually there's a downturn coming. It's just, I don't know how anyone could actually say what they expect for the next 2 quarters. But that being said, I do think 2026 is shaping up to be pretty good. So I not only do I think it's a good M&A environment next year, but we'll have deregulation, we'll have some visibility on taxes. I think the tariff drama is behind us, and the Fed, who's been on hold, is probably going to be dovish next year. I mean, to me, all of that means PE should be going up, and I think the $7 trillion of cash on the sidelines starts to get deployed. I mean, Bitcoin for the past 10 years has been not only a leading indicator, but I think a risk on indicator because it does respond to liquidity. So Bitcoin made an all-time high last week. Bitcoin peaked a month before the S&P did. So I do think this is telling us the S&P should be making all-time highs pretty soon, but it doesn't mean I think Bitcoin's capped as well. I mean, I think we have to keep in mind that institutional adoption for Bitcoin's growing. I think that consumer awareness for Bitcoin actually is still pretty nascent. And so when we still have a visible demand coming and a fixed supply, I think it's a lot of upside for Bitcoin.
We have 2 forces working together to push Bitcoin to new all-time highs, and I do think that rally will continue. One is that institutions are moving into the crypto space. We've seen over $8 billion in inflows into Bitcoin ETFs in the last 30 days. That's new demand against fixed supply, and that pushes prices up. But at the same time, we're getting a lot of unintentional support from Washington. I think the market today is reacting to the fact that the government has sort of said it's on board to grow deficits, to print more money, to expand the fiscal debt. And that's forcing people to look outside of fiat currencies to an alternative. Bitcoin is that alternative. I think this is the start of a major move. I think we're going to significantly exceed the previous all-time highs, and we're en route for another great year in Bitcoin. I think something may have started to break with investors' long-term appetite for debt, right? We have the 30-year over 5%. We see what's going on in Japan. I think people are starting to realize that the U.S. government has given up on the idea of substantial cuts. Deficits are going to continue ad infinitum, and that means the long-term value of the dollar is in question over time. People want alternatives. I think that's adding significant flows. Even independent of that, though, you have this structural mismatch between new demand and supply with institutions coming in. So that's sort of like the cherry on top that's forcing us up today. Yeah, I think there's a real fundamental difference between Bitcoin and assets like Ethereum and Solana. Bitcoin is the world's digital gold. Its blockchain is designed to serve that purpose, and it's widely held as money. It's held by more than 10 governments, by the largest corporations, the largest hedge funds. These other assets are very exciting investments. We're very bullish on Ethereum, very bullish on Solana. But even though they're called cryptocurrencies, they're more like tech plays. So I wouldn't expect them to perform similarly. I think their correlations will fall over time. Look, we're bullish on both. I think investors should own both, but one is digital gold and one is more like a new version of the NASDAQ. I think largely it's a distraction, to be honest. If we look over the past 4 months at what's come out of DC, it's been extraordinarily positive for crypto. We've seen a 180-degree turn from the SEC, from anti-crypto to pro-crypto. We've seen a stablecoin bill moving forward in Congress. We've seen an executive order that established a Bitcoin strategic reserve. I do think the Trump meme coin on the margin is negative for crypto, but there is so much good news embedded in the market. In fact, I'd argue that one of the reasons we're surging today is there was so much positive news out of Washington in the first 3 months that it was sort of lost amidst concerns about tariffs and the tariff tantrum. And that is now acting as a springboard. So yeah, I would say the Trump meme coin stuff is probably negative for crypto on the margin. We get questions about it from institutional investors, but it's not the real story. The real story is underneath, where we've had this fundamental change in DC's approach to crypto that's put it on the path to be an institutional asset. That's why we're at new all-time highs and why I think we're going higher still. It's beautiful that there are multiple ETFs and people can align with the one that fits their goals. So plenty of people love BlackRock, the world's largest asset manager. Some people in a specialist market want a specialist expert who's been managing investor capital in this space for the past 7 years, who understands how markets move over time, who is there whether the market is up or down. So when we speak to financial advisors, when we speak to institutions about BitB, they want to align with a specialist that they know they can call and get on the phone to explain what's happening on days like today or days when the market is down. That's the unique value add that Bitwise provides.
Tom Lee and Matt Hougan draws on Metcalfe's law, which states that a network's value grows exponentially with the number of users. He also highlights Tim Peterson's model, which attempts to quantify Bitcoin's fair value based on metrics like wallet growth, user adoption, and transaction activity. According to Hougan, Bitcoin's network effects strengthen after each halving cycle, and historically, these events have led to exponential price gains jumping from $10 to $100, $100 to $1,000, and so on. He suggests the next halving could be the catalyst that drives Bitcoin to $1 million. And while that may seem ambitious, Hougan notes that some experts are even more bullish.
I'm wildly bullish, and I think that, we displaced gold as the core of money. And the monetary value of gold is about 10 trillion. So 10 trillion, and let's say there's, just around numbers, 20 million Bitcoin. You're talking about, a meaningful price for the price of Bitcoin. The ultimate value is the monetary value of gold, 10 trillion. Okay. But that's not fair value. Fair value is determined by Metcalfe's law, and Tim Peterson has the best model on this. And it has to do with the number of nodes, the number of users, number of wallets, number of transactions. And that today is around 100-ish thousand, 95 to 105, somewhere in that range. It's kind of tough to pin down. And that will continue to accrete over time. And every halving, we add a zero. We get 10 times bigger as a network. So we went from 10 to 100, 100 to 1,000, 1,000 to 10,000, 10,000 to 100,000 this time, and next one will be 1 million. So that's coming. So I'm bullish. And I think, we'll be many millions as we get to 10 trillion of market cap. But I'm sorry, no, not many millions, but we'll be 500K. So that's my base case. That's my base case. But the price of gold will continue to appreciate as we print more fiat. So that number is not static, right? So 1 million, I think, is highly likely at the next halving. And the value of gold will continue to go up. So that's my base case. But as bullish as I am, and I've been bullish a long time, there's a guy you should interview sometime named Murray Stahl. Murray runs a firm called Horizon Kinetics in New York. Old school. He's even older than me, right? And I'm old. He's even older. And he was even earlier than me. And he makes me sound like a bear. He's like, no, Mark, you don't understand. This is the apex technology that will prove reverse Gresham's law. Throughout the history of mankind, Gresham's law has applied. Bad money crowds out good. In every shitty country you can think of, the bad money becomes worthless and crowds out all the good money. From Venezuela bolivars to Turkish lira right now, in real time. Bad money crowds out, and it's called Gresham's law. What Murray argues is reverse Gresham's law applies for the first time, and good money is going to crowd out all the bad. So he says, you're 10 trillion. Yeah, that's a given. We're going all the way, all fiat, which is right around 100 trillion. So that's guaranteed. And there's a great, I actually tweeted this out the other day. I said it's the perfect image. And it's a big triangle on the top and a little triangle on the bottom. This is Bitcoin, this is fiat. And that's exactly what's happening. There's all that gravity is going to push that bad money. And this little triangle is going to become all money. And maybe it's pyramid, that makes sense. Then put an all-seeing eye in it and it would be perfect. We've all lost money, right? We've all lost cash, or we've had a bank account kind of, we forget about it. But that's different, because they just print more. The problem with fiat is, like, there are stories where people, they open up a house and they see all the cash buried in the wall. No one missed that cash because they just printed more. But we know how many Bitcoins are because we have a permanent, immutable truth. And again, the aha moment for me was 838, now 839 years, we've had a trust system. Banking is built on trust. You give your money to a bank because it's not safe to hold it all yourself and carry it around. So you trust them. But I actually have a recurring nightmare, not like every day, but maybe once a year. Go to the bank and punch in my code, because I do have an ATM card, and it says $0. How would I prove it's not zero? I don't have a statement. I haven't had a statement for years. Is their word against mine? Now I could probably prove, because of old receipts or something, that I used to have money and now they say I don't, but it would be their word against mine. So that trust actually is a great system. I know people piss on it and they say, oh, it's terrible. I'm like, without it, we'd have still a pretty crappy life. I will argue fractional reserve banking is what created progress as we know it, but okay. But do I like be my own bank better? Yeah. Is it going to happen overnight? No. So until such time that we get there, there's going to be this interim piece of CeFi, and I think Coinbase is doing a great job and others doing a great job. But ultimately, do we all go DeFi? And is it, someone said this morning, every financial transaction in the future will be AI to AI, no humans.
Mark Yusko closes his commentary with a powerful, philosophical insight. For centuries, our financial systems have been built on trust. You deposit your money in a bank and simply believe it's safe and accessible. But what happens when that trust is broken? What if the system fails or makes a critical error? Bitcoin changes that. It replaces blind trust with mathematical certainty and immutable, transparent ledger that lets you verify your holdings anytime, without needing permission. This isn't just about chasing profits, it's about a fundamental shift in how society understands and interacts with money. If that message speaks to you, don't just watch, take action. Like this video, subscribe to the channel, and hit the notification bell so you never miss future insights on crypto and financial innovation. Watch more videos from our channel to dive deeper into Bitcoin, blockchain, and the future of finance. And don't forget to drop your thoughts in the comments. We love hearing from you. See you on next video.